Valerie was a true blue believer in the prospects for nuclear. Early investor in terrestrial energy, correct?
Mm-hmm.
That's somebody who's really putting their money where their mouth is 10 years ago, practically. It's getting there
Not
anyways.
quite, yeah.
You know. To build upon that, she started Nucleation Capital. I won't steal any fire, she'll talk all about it. But what I do admire about it is this idea of democratizing the investment in this technology.
I'm Valerie Gardner, and I'm a managing partner of Nucleation Capital. I am not an engineer, and I did start my career in high tech. So I started a couple tech companies with a JD MBA, did several tech companies, and after that I did some investment management. And I wasn't a true blue believer in nuclear right away. It took me a little while, and it started when I was looking at the sustainability movement and investing in clean energy. And I did my research and I looked into where we're getting our clean energy from. And this is around 2010. And 2/3 was coming from nuclear. So that's when I actually said, oh my God, nobody's talking about nuclear, what's going on with that? And that's when I started the deep dive. It's interesting to see how we are portraying and experiencing climate change, and I think this graph is actually beautiful. And as you can see, it's showcasing the temperature variance against our mean, and we are in the red. And I think that's a very clear statement of what's going on. You can see that there are 4 choices of pathways, starting from the least damaging down to the most damaging, more business as usual towards the bottom. None of them look good, because we really want to go back into the blue. And so far, there have been really no solutions for doing that. As nice as this graph is, I actually like a chart like this better. Displays the variance against the mean from 1880 to 1920 with CO2 parts per million in the yellow triangles, which is really interesting because they totally track each other. And the thing to really notice about it is that on the upper right, most recent tall bars show that we are above the green line with closest fit to the mean of that raise, and now the blue is above it, so it means that the rate of heating is increasing. Here's another chart from NOAA, who you probably know, National Oceanic and Atmospheric Administration, which tracks billion-dollar weather events. Flooding, winter storms, freezes, droughts, wildfires, hurricanes, all combined, it's a very similar curve. It's interesting because if you are an investor and you're looking for information about how to invest, this is the kind of data that actually gives you forward-looking information. Now, you can't get forward-looking information from looking at a stock chart, but you can get forward information from looking at data charts like this. And this is the kind of data that investors like to look at in order to assess risk. And based upon these charts and some other things that have come out, I want to share a little bit of what I call macro math, which I think will address some of the questions that many people have about, has the Ukraine war changed our attitudes about transitioning our energy and about nuclear? This is sort of the macro math. Cheap fossil fuels plus kind of uncertain climate impacts is less than what is the perceived cost of making a transition to 100% renewable energy, which requires a lot of excess costs for redundant power systems and batteries in order to firm up our energy system. And as we know, over the last few years, the cost of renewable energy has really declined. And then because of the chart that I just showed you, the uncertain climate impacts is really starting to shift. We are seeing this trend being stronger, scarier, more expensive. In the last 20 years being tracked, the numbers something like 200 trillion and just 145 billion in 21 by itself. Unfortunately, both of those trend lines didn't really have much impact, only on the margins of changing our dependence on cheap fossil fuels. But as you will see, with the Ukraine war changing not only the cost of fuels, the availability of fuels, but also the sense of our geopolitical risk, we're seeing that we no longer have access to cheap fossil fuels. So this actually is, I think, something that marks an inflection point. And we've changed the formula. We're changing the whole equation now, because now we're seeing expensive fossil fuels plus very certain and costly climate impacts being greater than the cost of transitioning to cheap renewables. And then when you add on the fact that we can save costs by saving existing nuclear, then you really have something. And that, I think, is what we're seeing, that politicians have finally figured out that they can achieve this energy transition a little bit more cost effectively if they don't do the stupid thing of shutting perfectly good working nuclear power plants that provide the firm baseload that we need. I'm suggesting that this is a key inflection point that is actually not just changing sort of the attitudes about investors, but it is sparking a major inflection point in our pathway here in terms of addressing climate change. And now let's add in the most recent news, which is the Biden Inflation Reduction Act, which Credit Suisse estimated would lower the cost of climate technologies by 40% on average. Those incentives, added to the formula that we've just seen, is going to really raise the convictions of any macro math laggards out there about the cost benefits of replacing fossil fuels. So I think this is much bigger and much more important than what we've seen in the past. I don't think we're on the same trajectory anymore. In fact, I think we're going through something of a phase change on climate. It's no longer something fringy, questioned, doubted, fad-like, and popular only with progressives. It is something that John Naisbitt, in his 1982 book called a megatrend. Naisbitt described a megatrend as follows: they're powerful technological, economic, and social forces that develop from a groundswell of early adoption, move into the mainstream, the mass market, and disrupt the status quo, a mature market, we know what that is, driving change, productivity, and ultimately growth opportunities for companies, industries, and entire economies. Is climate change restructuring global economies and attitudes? Well, I think the IRA is certainly a good example of that. In fact, Credit Suisse wrote that the IRA will have a profound effect across industries in the next decade and beyond, and could ultimately shape the direction of American economy.
What do you mean by IRA?
The Inflation Reduction Act from Biden. Okay. So that sounds like a megatrend to me. And importantly, the IRA is leveling the playing field between renewables and nuclear. The Biden administration and Congress, thank God, have shown repeated strong support for nuclear power and even advanced nuclear innovation. They showed it in the 2020 Energy Omnibus Act, the Infrastructure Investment and Jobs Act, which was the bill that funded the Civil Nuclear Credit Program, which authorized $6 billion for saving existing nuclear. Those bills and the job that the DOE is doing under Secretary Jennifer Granholm, who's unabashedly touting nuclear power, has provided permission, and especially progressives' permission, for nuclear to be included as a climate solution. Diablo Canyon has been a beneficiary of that. Gavin Newsom, who's a shrewd political operator who appears to have aspirations for higher office, was able to make the switch from anti-nuclear to pro-nuclear and orchestrated the recovery of this plant. And I believe he got great cover from the pro-nuclear advocacy that was done, and that provided political permission for him to do that, which cannot be understated, the importance of all of that. So with climate a megatrend and nuclear's inclusion as a way to address climate as a very big deal, it's hard to overstate the importance of this on the growth of nuclear as technology, as an industry, and for all of the various ventures and companies out there looking to introduce new technologies. At this moment, there are so many investors clamoring for sustainable solutions and not finding investments that actually show an ability to scale solutions of climate at scale. The UN tracks something called the Principles of Responsible Investing, and I'm going to just start here, but there are a couple of these I want to run through, which tracks investment firms managing money for almost every group out there, pensions, funds, foundations, you name it. There's 120 trillion in assets that have now committed to investing under a sustainable investment agreement. I will say that most of them have not figured out where to invest, which is very interesting. And then the Divest Invest group, which was founded about a decade ago by students, also now has about 40 trillion committed to divesting from fossil fuel companies. Most of their commitments are for 3 to 5 year plans to transition from fossil fuels to something else. That something else is not obvious, and it's not easy to find. Quite a number of things that are being done for renewables happen to be projects and not companies, and not large industries, that it's very easy to figure out where you put your money. Not surprisingly, young people are driving a lot of the changes and a lot of the demands rolling through not only corporate America, but the investment world. A recent Gallup poll found that half of investors are interested in sustainable investing, and that's up from only 25% in 2019. For most people, the answer is ESG funds. This is showing the growth of ESG funds and ETFs. Groups like the S&P, Sustainalytics, MSCI, Bloomberg, you name it, they're rating companies based upon their performance across a broad range of environmental, social, and governance metrics. So that's where you get the ESG part. Here's the debt chart showing growth of green bonds and green debt funds, equally, following that same kind of trend. Unfortunately, that's happened with the ESG is sort of an unregulated area. It's a little bit of a wild west, and there's very little consistency, or even what I would call materiality, in the way ESG ratings are currently being done. I happen to think E is what matters, climate change is what matters, but S and G are given equal weight, and they are prone to substantial greenwashing. So, for example, this year, Tesla got booted off of the S&P's sustainable index metric for having bad G and bad S scores, even though they are frigging biggest electric car company in the world and has the highest valuation of any company almost on the planet, and they were booted because of bad social skills. So if you're looking to invest in companies that are going to survive in a world that wants to invest in a carbon managed economy, ESG is not necessarily going to get you there right now. However, despite this, corporate America is still very keen on being viewed as greener, and they want to be shown as more conscientious. And I'm not going to play the video, but Google is the first company in the world to have committed to completely being carbon-free on a 24/7 basis with clean energy by 2030, and there are a lot of other commitments, and they're similar and there's overlapping ones, but they have said clean energy, and we can thank Ross Koningstein for that. Their focus on clean energy and not renewable energy, which is a very big deal because most of the other groups have focused on renewable energy. Microsoft also has committed to very aggressive goals, and the company formerly known as Facebook has also been doing this. And in fact, about half of the renewables are being sold to these kinds of tech companies, which have enormous data centers, to be able to claim that they have cleaned their energy usage as a company. And when they can't buy actual contracts for the energy of solar and wind farms, what they do is they contract for renewable energy credits. And they voluntarily pay a credit fee to like a solar farm or a wind farm, and they pay money to be able to claim the right to having produced that new energy installation. This is currently a voluntary market that is $12 billion and is estimated to grow to $100 billion. And that's just so that these companies can buff their reputations, which is pretty incredible. But there's very good news in that, because up until now, guess what? Nuclear wasn't allowed to play in that great free money game. And for the first time, Microsoft in Canada penned a deal with OPG to buy carbon credits from power that was produced from nuclear. There's also hydrogen in there. Oops. That is going to be very good news if more nuclear companies can take advantage of that. Companies wanting to reduce their climate impacts and be more proactive are doing it not just because of ESG scores, but also because sustainable values attracts customers and employees. And in fact, sustainably marketed products are growing at more than 2.5 times normal products. In response to investors' demand for better information, now the SEC is getting into this game, and they are planning to standardize reporting that companies need to make on their actual 10Ks and 10Qs, which is the reporting that they do for investors. This is good news. The SEC getting involved is very important because that's going to provide real requirements on corporations. They can be liable if they don't report accurately. And it's very good news because millennials really care about this stuff. Surveys show that millennials only want to work for sustainable companies predominantly and would even take pay cuts to do so. And while some companies are still out there saying that their only job is to maximize short-term shareholder value, if you are one of those companies, you are probably going to be in a world of hurt because the millennials, while they don't have a lot to invest now, are going to inherit trillions of dollars in the coming decade. And they do not want to have companies that don't care about their planet. So you could be memed out of business by a Gen Zer if you're not careful. So this points to tectonic shifts occurring across industries and within the investment community. Climate is actually changing the rules for how all companies operate, and most particularly how we generate our power. John Doerr, who's a famed Kleiner Perkins venture capitalist who just gave over $1 billion to Stanford, said that stopping climate change represents the greatest economic opportunity of our lifetimes. That's saying something when you've been investing in the tech revolution your whole life, as he has. But of course, everybody knows that everything that we do in our economy these days needs power. So every single industry is undergirded by energy. Doerr and other famed VC cohorts like Mark Andreessen and Vinod Khosla had substantial success investing in early stage tech companies like Google, Amazon, eBay, Tesla, and others. The performance of their funds exceeded that of public markets, and it created a huge amount of demand for venture capital. So now we're getting into a little bit more about what I'm currently doing, global venture financing through venture capital. This is the growth of venture capital from 2014 through 2022. You can see that that has really increased. Here is growth of investing in renewable deals. It's grown about 300% in 2021. And best of all, nuclear is right there with it. It's really surged in 2021, and it really didn't have a lot of activity in the years prior to that, but it is beginning to catch up, and I think it's because of this inflection point that we've seen. So you've seen some of the headlines about these nuclear deals. Commonwealth Fusion pulled down a staggering $1.8 billion. And brought in dozens of investors who had never invested in nuclear power, which is very cool from my perspective. But there were also quite a lot of other fission and fusion deals that raised capital, including TerraPower, Helion, NuScale, which did the SPAC IPOs, you know. Nucleo also raised record rounds. Those are the headline grabbers, but there were dozens of other nuclear ventures that also raised capital from some of the new funds that have been sprouted during this period of high venture capital interest. And my fund, in fact, made our first investments for our first 50 investors, and we are starting to build the very first ever advanced nuclear portfolio. So you might be thinking, well, that's great, but how do I get to invest in high growth advanced nuclear ventures? I can't afford to participate in venture capital. And while historically that's true, I'm pleased to say that that paradigm is shifting. VCs typically have multi-million-dollar minimums to get involved, and they've had to raise most of their capital from institutions. But in today's world, with a lot of different funds, a lot of diverse types of investors, it's not true anymore. The SEC has also liberalized the rules for being an accredited investor, and technology has brought automation, leverage, and real cost economies to starting a venture fund. So I'm pleased to say that among the new venture funds that have been floated recently, there are a lot that offer a different paradigm for investing, which include allowing a whole swath of investors to invest at lower levels of capital and make it much more affordable. Nucleation Capital. Here's a picture of our sort of fund homepage on the platform which we use, which is AngelList Venture. Is just such a fund. It is accessible online. You get to pick how much you want to invest on a quarterly basis and how many quarters you want to invest. You get all your reports, and we track K1s and everything right through this portal. So it makes it very easy and affordable, and by not having to put all of the capital up front, you get to do a little bit better cash management and planning. Given the fact that much of the high-tech, climate tech type of innovation that is happening within the climate tech sector as well as the nuclear sector, it's my sense that the only way, unless you have direct access to deals, the best way for climate-concerned investors to lean into funding climate solutions is through venture capital. But I also want to be clear that investing in venture capital is risky. You can make 5 times your money, you can make 5,000 times your money, and you can lose all your money. So it's a really big distribution. On top of this, capital is illiquid for a long period of time because it is being put to work in private companies that do not trade on any exchange, so you can't just sell your holdings. You have to hold on to them. Typical terms are 10 years. It's not right for everyone. Nucleation is an evergreen fund, which means that we are continuously raising capital, and it's very gratifying that our investors are those who are very keen to see the next generation of nuclear energy emerge and are willing to put some of their funds to doing that work. It gives us great freedom to take more risks within the nuclear community, which is very important. But they know they're taking risks, and we appreciate that the kinds of risks they're taking is very important. And the way I think about it is that we are trying to come up with the technological black swans that will solve climate, and not just solve it for the energy system, but provide the abundance of energy that we need to power the restoration of a healthy climate, which means drawing down all those carbon emissions. And you cannot do that with intermittent power or dirty power. You need nuclear. So we believe that there will be a non-linear jump in our ability to power the whole world sustainably, cleanly, and abundantly when nuclear becomes commercial technology.
Is that it? All right.
Who would be the right person to measure the performance of whether it's wind or solar or nuclear in dollars per gigaton of CO2 avoided? Because this is the hypothesis from AR6, and so I'll give you the figure. But basically it's predicting nuclear would achieve a quarter ton at below reference cost, and wind and solar would achieve over 2 gigatons at below reference cost. So is this a nucleation project, or is this something that you might do in collaboration with grad students or someone else?
Nucleation doesn't do projects, we do investing. But I will tell you that whether or not it's a successful energy system or build has a lot to do with the various financing structures, the various off-take agreements, whether or not you can qualify for a carbon credit. If you can get millions of dollars to go to pay for your system that have nothing to do with your energy generation the way solar and wind can, nuclear has a hard time competing with that because they don't even get capacity payments in the grid. So read Meredith Angwin's book to understand how complicated and crazy and unfair the grid has been towards nuclear, and know that Microsoft and OPG signed a nuclear carbon credit agreement is going to make a world of difference to the profitability of not just existing plants, but advanced nuclear plants.
Very good. I want to thank Valerie for super great work, innovative approach to investing.